What's going on YouTube? Mike here, back again with our third video in the 100% free Smart Money Concepts Forex trading course that I am calling 5-Step Forex. And so in this video, I'm going to go over how to actually mark up and draw and visually see a break of structure in any market. So before we get started, just to answer what I think are probably going to be really common questions. First of all, I just want to remind you that this applies to any chart and any time frame. So it does not matter that I'm using specifically Australian dollar and the Japanese yen. You can use any chart, whatever your favorite chart is that you trade. This concept applies to that, and it also applies to any time frame. It does not matter. The other thing I want to do really quick is just show you how to use the drawing tool that I'm going to be using and how to set that up. I have a feeling there's probably going to be a lot of very new traders coming to this, so I just want to get that question out of the way as well. And so let's go ahead and get started by setting up the actual trend line. So what you need to do is come over to the upper left-hand corner, click on your icon, and then come down to drawing panel. And if this is not turned on, your screen will look like this, and it will not have the drawing panel. And so we need to have this on so we can actually pull up our drawing tools. So once it's turned on, all you have to do is come back over here, and it's actually the second icon down, which looks like this. If for some reason you have a different tool selected, there's a little arrow here that you can click, and then all you would need to do is select trend line at the top. Once you have the trend line selected, you can just click on the screen and then drag it across and click again. And then you should see a bar somewhere like this on your screen that will allow you to set up the settings. All you have to do is pick a color that you want to use. I'm using this one. And then I also have it set to the thinnest option and a solid line. If there's any other settings you want to add, you can go to the gear icon and add text and stuff like that above or below and go through all of these settings to set up a more visual representation. So once you have your trend line set up, there's a few keyboard shortcuts that I'm going to be using to make it a little bit easier. If you don't know this yet, you can, when you're using a drawing tool, you can actually hold Control or Command depending on your device, and it will then snap the drawing tool to the closest candle wick, or if you move up a little bit, then it will close it to the candle body close. And so we can hold Control and Command and move our drawing tool around to actually get it to the true bottom wick of this candle. Another thing where I'm going to be using quite regularly is holding the Shift key, and when I hold the Shift key, it makes it a perfectly straight line. And you can also do this up and down and like a diagonal trend line like this as well. I'm not ever actually going to use these two ways here, just showing you what the function of TradingView is. And so we're going to be using this constantly to mark up our break of structure and wicks throughout this lesson. Okay, and so let's go ahead and get started with actually spotting and marking a break of structure. And through this example, I will show you the differences between the candle body close and wick of candles and what that means in terms of the break of structure. So I'm just going to go ahead and use this section that's already pulled up on price action here. There's actually quite a few examples that work really well. But again, like I said earlier in the video, this applies to any section of any chart, any time frame. You can apply this to, including a live market, and map your structure this way. So I'm going to start off right here just because I see something very clearly. And from this point on, it is then very clear what the market is doing. So I can see here at this high, we have a wick right here. And this is actually the perfect place to show you the difference between a wick and a candle body close in the first example. And so this is actually a great example of just a wick. The candle did not actually close above this high. We have a rally here that caused a high, and then a pullback, and then a rally again that attempted to break this high. This is not actually a break of structure. This is just a wick of this high. You can see that on this time frame on the 4-hour chart, and again, this applies to any time frame, it doesn't matter. So I just, for now, just ignore what time frame this is. The candle, this one candle rallied up, and it did spike above that high with a wick, but then it retraced back down and closed under this high over here. And so in doing that, we just call that a failed higher high, or in a sell example, that would be a failed lower low. We can also call that a failed reaction. We can call that a liquidity grab. There's many different terms that people refer it to. I just refer to it as a failed higher high until we actually have a clear breaker structure, which I will go over now. So if we come back down, we can see price tried to rally and it did wick that high, but then it ended up selling off. And once we had this sell off, we can come back down to this low right here, and we can get our trend line, and we can hold shift and drag it all the way over to the edge of this candle. And we can see that this candle did actually pierce this low right here, and it did actually close underneath that low. And so we can see the difference here, just to get both of them in the screen. We can see the difference that this candle did actually close below this low, and this is actually a valid break of structure. This is not a valid break of structure up on the top. This is actually just a wick. So there is a difference here, and you'll see throughout this free course, as well as my full in-depth course that I do offer, that this does make a very big difference in how we map our structure and how we go through and actually determine which direction the market is most likely to go. And so now, after we've marked this break of structure, there's a few characteristics in the last video that I explained that I want to go over with you before we continue on with more examples. So every time we have a break of structure, we can just automatically assume that eventually, it doesn't have to do it right away, eventually the price is going to pull back into that newly created range and before it continues on. And so it actually did this twice. So if you were watching this in a live market, you would see the 4-hour candle close below, and it rallied a little bit lower, pulled back into this range, and then continued on. But later on, the swing trend came back up into our new range, up into our newly created range here, before continuing to sell off with the newly created trend after this break of structure. And so it's very common to see a pullback after a break of structure. That's why most breakout strategies don't actually work, is because after it breaks out, this would trigger you. Like if you were trading an actual breakout strategy, you would go in to sell here and you just immediately market execute or whatever the strategy is. I don't actually trade this kind of way, but if you did, it would have gone a little bit in your favor and then way against your favor. And so like if you traded this straight out, just the breakout, and you had your stop loss above that candle, that would be like a 65, depending on how you place it, 65 pip stop loss. And that's just ridiculous. We want to be way more accurate with our stop loss and place it and have a much higher risk to reward ratio. So we're not actually trading, we're not using a break of structure to actually enter a trade. This is just like the most foundational part in a much bigger picture here. And I think you're going to really understand that as we go through this course. So now that I've explained that part about the pullback, let's go ahead and continue on with more examples. And so we can see here, after this break of structure, price came down and it created this low where it then pulled back up into the range. And so I would like to mark this low here, and we're going to drag it all the way over across, and we can see that at no point in at least what's on the screen was there ever a break of structure. So again, we have a similar scenario to up here, where price wicked this low, but it did not actually break. So this is not a valid break of structure. This is actually a liquidity grab, or what's also known as a failed lower low. And so price then came back up to this high and rallied back down to this low, at which point we can call this a break of structure right here. And this is a really small range that was created by this break of structure, where it then came back, pulled back into the range, and continued on. And we can see in this period on the chart, so if we had a break of structure right here, this now becomes a low, and we can see that this period on the chart did not actually break until this candle over here. So technically, this is all one big swing range, which we go over in depth in my course. But right now, I'm just doing very basic market structure, which is just the break of structure. So depending on how you actually go through here and perceive this, your lines may look a little bit different than mine until you understand swing structure. But what's important right now is that we're just learning about actual candle body closures and wicks and the short ranges that can be created by break of structure. And so regardless of how you get over to this point right here, this is obviously a very clean break of structure, which then defines a new range in this, basically in this one candle or two candles right here. We're after that break of structure. So if you're marking it from this low way back here, or you're marking it from this low right here, either way, this now becomes the supply zone or the swing high. And after the break of structure, we can see it retrace back up into this zone before selling off and creating another break of structure. So we have a low here that was then broken by this candle here. And so technically this wick in this candle and the wick in this candle were not breaks of structure until this candle actually broke and closed below this low. That is a break of structure. And so we can see after quite some time, after many days, price did continue to pull back up into this zone, and it then continued to sell off. And this actually brings me to a great example in the differences of the types of structure that you can actually mark as a break of structure. So in this pullback, we have a very corrective, long, this pullback lasted for, let's see, all in all, this whole entire swing pullback lasted for almost 20 days. So 18 days, 17 days, depending on where you measure it from. And as you can see, it was pretty corrective and pretty sloppy looking compared to the pro trend move here, where it just sold off very rapidly and quickly. And so I just want to show you within this pullback, there is also breaks of structure as well. And so I hope that this video is actually starting to get your eyes adjusted to the way that smart money can move the charts and the way that we can actually follow the trend without using any complex indicators. So we have this low. Let me actually mark this low really quick just to make it a little bit more obvious. And so we have this low right here. And as you can see, for many, many days, almost 2.5 weeks, we didn't actually break. And so let's analyze this pullback within this range. So from this low on, we did have a break of structure right here on this little pullback. It came down and it failed to break below this low. So we can then technically mark that as a break of structure. We can then also see where after the break of structure, it pulled back into this zone and then rallied up to break this high, and it just barely broke above it and then pulled back into this zone and then rallied on again to break this high here, which we can mark with our trend line. We can see this candle did actually break and close above this high. So that is a continuation of the trend. After the break of structure, it pulled back into the zone and then rallied back up, which we can mark here with our trend line. We can see this big candle actually did break and close above that to continue the trend. Very small pullback, but it is a pullback into the range, and then it continued on with another rally, which we can mark here. And again, another example of all these wicks. It may have wicked just above that high, wick just above that high, didn't actually clear the high, but there's another wick, 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 wick. All of this stuff here is not actually a break of structure until the candle body actually closes above this high. So once we got this candle body closed, we ran up a little bit further up into this old range that we have here. And price then starts to break down and reverse and go pro trend again. And so we'll talk about this stuff later on in the course, how to spot when the trend is actually starting to turn around and break. And we do go over trend changes in depth in the course that I do have. And so after this, we do see price comes down. And like I already mentioned, it wicks and it pulls back. And then it finally actually breaks into a new range. And so now the new range would be this entire high and low here. And we can see the same thing repeating again. We see multiple breaks of structure, and we see price action pulling back up into the range and then continuing on where it looks like for quite some time it never actually breaks this low, and perhaps the trend changes or it just consolidates for a while. I'm going to leave it at this for the price action just because you can go on forever. And now I want to show you a few examples of different time frames and how this applies to different time frames. So we currently, for this entire example, have been on the 4-hour chart, and now I want to go ahead and drop down to the 15-minute chart. Again, these concepts work on any time frame. It does not matter what time frame you trade. I'm just showing you these two time frames specifically just as an example. And so let's go ahead and drop down to the 15-minute chart and use the same range here to mark up breaks of structure on the 15-minute. Okay, and so this is where it can get a little bit complicated, a little bit overwhelming for a new trader, especially if you're new to smart money concepts, because it really depends on like how you perceive highs and lows and how you perceive your swing highs and swing lows. And I have a video that I actually talk about this in my course where it doesn't really truly matter how you mark up your structure compared to me or compared to the next trader. What really matters is the consistent approach in how you do it repeatedly over and over and over again. And so I want to show you just like a prime example of different ways that you can mark a break of structure without even understanding a swing high and a swing low. And let's just use this little range right here to see exactly how we can do that. So this is one of the old markings that we had on the 4-hour break of structure. And let's go ahead and just spot the break of structures that we can see within this range on the 15-minute chart. So we have quite a few really, and what helps me is to just run through price action, and like I actually think this in my head what I'm about to say, and I just kind of run myself through and explain visually what's happening in the market in this period of time or on an actual live chart when I'm trading live. So from this high, we can see price pulled back down into this range, and from here, this sharp sell-off right here, it stopped, pulled back up, and then kept kept running on down. So we can count that as a small pullback on the 15-minute chart, and we have a break of structure right there. It then came down, pulled back into the range, where it then continued the sharp sell-off, and we can see here another break of structure. We can see it continued to sell off, it pulled back and failed to create a lower low, and it then came back up to form a new high. We can mark that with our trend tool, and we can see that is another break of structure. Now, one thing I just want to point out is if you're trading all the way down on small time frames like this, stuff like this can still be marked as a break of structure. So we have a pullback here, and it then came up and then pulled back again, and we have a break of structure on basically a smaller time frame. Now this is a very small break of structure, but it is still a break of structure because if a pullback, rally up, and the candle closes below or above it, and then it pulls back into the range and continues on. And so in this example, this is kind of a messy example here, but we can see from this high, if we draw a line all the way over, that it didn't actually give us a break of structure until this candle and closed above the old high. All of these wicks right here did not actually count as a break of structure until the body actually closes above the old high. Once we continued on, it then went on to break this swing high up here, after which you can then see that it gave a little rally and then it pulled back into the range and continued on. So what do we have again? From this high, we can mark a trend line all the way over to this break of structure. We can see where the candle body did actually close above this previous high, and we can then see where it rallied up a little bit longer, pulled back, and continued on, only to give us a wick in this situation. So in this scenario, we can see that these were all wicks, so this actually failed to close above this high and failed to create a higher high, at which point it then pulled back and continuously kept pulling back for quite some time. And so we can see some consolidation here, and this is where it can get really messy, and my breaks of structure may look different than your breaks of structure, and that's totally okay as long as you're consistent with your actions. That will bring you consistent results. And so without going on much further and breaking all this stuff up, let's go ahead and just focus on like the bigger swing highs and lows. We can see from here over here, we have a pullback, and then it continues on and it breaks structure above here, at which point it continues to rally. And you can see on this 15-minute time frame, this is actually a big swing pullback from this area here, where it then continues on from this low to this high, and then it pulls back into this zone and continues going. And so obviously it's very easy if you're just marking breaks of structure, it's very easy to get lost. And that's why I'm doing this entire free course, is to help help you map your market structure with way more accuracy than just a breakup structure. So throughout this course, I know that this looks messy and I know it looks confusing, but adding the other 4 steps from the 5-step Forex course is going to add in a lot more confluence, and it's all going to make a lot of sense. Right now, I'm just going strictly over one piece out of 5 very major pieces of a big puzzle, and just explaining it to you, hopefully getting your eyes familiar with what a breakup structure actually looks like. And so now if we zoom back out, we can remind ourselves here that we are on an actual pullback on a higher time frame before we continue on down lower with the pro trend move. You can see here, it's kind of a side note, but you can see here pullbacks are very corrective and they're kind of messy and they have all sorts of crazy up and down moves inside of them. And then when we go switch back to pro trend moves, they sell off immediately. And so that's why we favor, the stuff I talk about in the course and everything, we talk about favoring pro trend moves because they actually move way faster, where in here you're just looking for scalps and you're just assuming that at any point in time price is going to turn around. Yeah, this pretty much wraps up a break of market structure using smart money concepts. As I mentioned, just to kind of like recap everything, these concepts work on any time frame. It does not matter what time frame or even what chart you're applying this to. You can see a break of structure anywhere on any chart. And after a break of structure, what can we always expect? We can expect a pullback on that time frame. This was obviously a very aggressive sell-off, but it still did pull back. This here was another break of structure we went over, and it did pull back. Again, break of structure here, and it did pull back. And this is the same exact scenario for buy examples as well. It just depends on which direction the market is trending at that point in time. I know I focused a lot on sells, but this does apply also to buys here. Like for example, we can see a break of structure here. You can also see a little break of structure right there. If we back way up and we zoom way out, we can see another swing break of structure here, and so on and so forth. And so I would really urge you to take the next couple of days to practice this concept and just mark it up on your chart, because it's going to make the rest of this free course that much more easy to understand. And so hopefully this video makes sense. If you have any questions or comments, definitely be sure to comment below and leave your questions so I can try to refine the content to make it a little bit easier to understand. Let me know if you're a beginner trader, if you're intermediate, if you're advanced. If you're an advanced trader, this was probably really basic information for you, but you can still obviously learn something from another person's perspective. And so, yeah, I hope you found this video useful. Next week, I'm going to have 2 more videos coming out, and we're going to talk all about supply and demand. And I'm really excited for that one because it's going to add so much more confluence to what we just talked about now. So definitely be sure to subscribe, turn on your notifications, and watch out for the next video next week. We'll see you then.